Hey guys, good morning. I am out, as you can tell, I'm in my truck. I'm out, just finished up showing some clients, and my all-time favorite people in all the world is Tom Sherman with Benchmark Mortgage. How you doing this today, Tom?
Well, I wish I were out and about with you, Dan. As you can tell, I'm in my cubby hole today.
Listen, you got to do what you got to do from where you're at. So I'm not going to feel too sorry for you because I think there's a lake not too far from where you're at.
Yeah, we're about a stone's throw away.
Okay, well, good, good. Hey, so Tom, we've done this from time to time doing the Mortgage Minute. I know it's not a minute, maybe just a little bit longer than that, but we've had some big, significant changes take place in the last, 48 hours, and it's having an impact now, going to have an impact. We haven't had this kind of adjustment in the rates in a while. Can you kind of talk about that? And
Yeah, absolutely.
what does that mean right now in our world, the real estate market, for our buyers out there?
Yeah, so at a high level, I think it's important to understand that what has occurred was needed. Okay. We had a situation where inflation was really kind of running away. In fact, if you look at real estate prices alone in 70% of your top markets in the United States, they saw an increase in home values of greater than 7% in the last 3 months alone.
Wow.
So if you think about that, just kind of walk that through, if that were to continue, that's greater than 20% appreciation a year in your home values.
Mm-hmm.
Okay. Well, what that was leading to was some pretty significant inflation. You add into that lumber prices, food prices, gas prices, everything else that's happening right now. And inflation was a really big concern for the federal government.
Okay.
Well, the only way the government can change that and try to slow inflation down is to increase the federal funds rate. And the federal funds rate is the interest rate that banks have to pay when they borrow money from the federal government. Okay. So if you think about the flow of money, banks borrow money from the federal government. They then turn around and lend that money to you and me as consumers. And by doing that, we go out and stimulate the economy. So if you make it more expensive for the banks to borrow money from the government, then in turn, that's going to make it more expensive for us as consumers to borrow money from the bank, which then in turn is going to slow down the economy because we're not going to buy as much stuff. Okay. Right. That's a very simple view of it, but pretty much the way it works. So what happened is the government has been telling us for the last several months that they were going to be increasing interest rates, and they're talking about the federal funds rate. Well, here last month, they increased it 0.25%. And then here on Wednesday, they actually increased it 0.5%. And they indicated that not only are they increasing it 0.5%, there's a very real likelihood there's going to be another 0.5% increase next time they meet, and then 0.25% increase for the next several months up until the end of the year. Okay. Mm-hmm. The goal is they know they have got to slow down inflation. They've got to. Inflation as a whole, we all can get very excited about it because our home values are going up, et cetera. But the reality is that some inflation is good, but where we're at now, inflation is outpacing incomes. It's outpacing net worth appreciation. All these things, inflation is outpacing, which means it's actually a negative thing. Yeah. One of the things that I look at, and I think it's important to look at, Dan, is housing affordability. And I read an article yesterday that was talking about home affordability. And that's a metrics that we look at to determine how affordable is it for someone to buy a home. Okay. Okay. Affordability right now is nearing its all-time low in the history of the United States. And what that means is that it's getting harder and harder for the average person to buy a house. Correct. You and I have talked a lot about that, not only in regards to interest rates, but home prices alone. I mean, it's getting harder and harder for someone to even qualify for a home. And you and I have talked a lot about the impact of interest rates, but starting in the beginning of January, rates were around 3%. They're now in the mid 5s. And on a $500,000 house, that's $600-700 a month, right?
Wow. Wow.
It's huge.
Yeah.
And so then you couple that with the fact that we saw a 20% increase in our home values over the last 12 months. Now your property taxes are up $200 to $300 a month for that same house. So literally in a 1 to 2 month swing, we've had almost $1,000 swing in monthly payments for a typical consumer. So
that's going to be huge.
it's huge, and it significantly impacts what people can afford.
So, my thoughts when I hear you say that, anybody that's had buyer fatigue, it's going to be really challenging. My first thought is that we should see a slowdown in the number of offers on houses, because we're still seeing, Tom, not just in the 400, 500, 600,000 price homes. I mean, going up to we just sold one. It was on the market for 2.25, and it sold for 2.8 million. 500, close to a little over 500,000 over the asking price. And we haven't seen it hit just yet. What's your thoughts on that? Do you see us seeing a shrinking of the amount of buyers in the market, or just having to adjust down for their expectations?
Yeah, it's a great question. There's been a couple interesting articles that have been out there. Number one, Steve Brown was talking in Dallas Morning News about this, and then there was actually an article in Bloomberg that was talking about the same thing. And they both had two totally different ideas of what's going on. Bloomberg says it's coming down, everything's going to crash, and Steve Brown is saying, hey, this could go on for another 3 to 5 years.
Yeah,
I'm in the Steve Brown camp, and the reason is as a lender, we always look at how easy is it for people to get money, and if it's real easy to get money, then typically people will make different financial decisions. And that's what happened in 2008. It was super easy to get money. They ended up paying, they're bidding over home price values just because it was easy to get money. Well, what we're dealing with today is the money's not easy to get. That's still hard. The government changed the guidelines. It's still hard to get money.
Mm-hmm.
But what's changed is the number of buyers that are doing everything they can to move to this area.
Mm-hmm.
And so, what you're noticing, if you and I just take hop on a time machine and go back to 2005, 2006, everybody was investing. They were all buying investment real estate, right?
Yeah.
Building up portfolios. Well, now, when was the last time you sold a client an investment home? Months.
Yeah, it's been a while.
They're buying homes to live in.
Or they're buying them off market, where they're not competing, so it's not going to the traditional MLS.
Yeah, and I'll tell you, the only investors are cash. I mean, the true buyers of investment home are cash.
Well, Tom, we're seeing close to 40% of all offers coming in are cash offers.
Bingo.
Yeah.
So you think about everything we're talking about, and that goes, again, part of the reason I lean towards the Steve Brown camp is that until there's a shift in the number of people moving to this area, I don't think you're going to see any kind of pullback in this market. I think personally, if I were a betting man, I'd say we're probably 12 to 18 months before we get back to a relatively normal market. Yeah. And so you're going to see this, and then it'll start leveling out.
You know what? Hey, until we see it starting to crest, it's going to keep doing this.
Yes.
At this point, this not only applies for homes for sale, but also applies for homes for lease. And both for home selling and home leasing, the demand is still there. So, hey, Tom, this is helpful. Is there any last minute advice that you would give to a buyer right now, considering, do I jump in the market? Do I not jump in the market? What's your thoughts on that?
Yeah, and I do a lot of consultations with buyers, obviously, and I get that question a lot. And I'm telling everybody, there's no way you can time this market. It's just like kind of, is it time to jump into the stock market? Is it time to jump into the oil and gas market? It's, you still have to come back to the fundamentals. Do you need a place to live?
Yep.
And I can tell you that, if the choice is, well, we're going to just keep renting, well, that's a guarantee for your rents to keep going up, because, I'm seeing a lot of people that are doing 7 and 8 month leases, not because they are trying to time them, but because the costs are going up so quickly that they're increasing their rents every 7 to 8 months. So, that's number one. Number two, I'm a firm believer that if you're looking at buying a house, make sure that you've spoken with everyone you know. Have you spoken with your, mom and dad and your 401k provider and your, stock advisor, everybody who can give you some access to some money?
Mm-hmm.
Because chances are you're going to be making an offer 5 to 10%, if not more, over the list price. And if you're going to do that, you're going to have to waive appraisals, and you're going to have to be willing to cover that difference when you buy the house.
Yep.
So I'm really encouraging buyers to get their financial house in order. It's always been a priority, Dan, but now more than ever, do not start looking at homes until you have worked with a lender that not just qualifies you, because that's, I tell people I can teach a monkey to qualify you. You need to work with a lender that's actually going to coach you and consult you through this process, help you understand what's going on in the market, and then more importantly, really, really, really make sure that you're prepared to hop into the deep end of this pool.
Awesome. Hey, Tom, how does someone get a hold of you to have a question?
Best way is cell 214-680-1166.
Okay, we'll get that typed in below as well, 214-680-1166. Tom, your information professionalism is always timely, and what I love about it, it's if you're going to go into battle to win something, you got to take your strongest weapons, your strongest people with you, and you definitely are one of those folks. So I appreciate you. Guys, you have any questions on anything real estate related, loans or anything like that, we're always happy to help out. I'm Dan Harker with Keller Williams Realty and the Harker 5-Star team, and it's Tom Sherman with Benchmark Mortgage. Y'all have an awesome day today, and we will look forward to talking further